Welcome back, everyone. Next, we have AGBA Group Holding Limited, trades on the NASDAQ under the symbol AGBA, and is a leading one-stop financial supermarket based in Hong Kong, offering the broadest set of financial services and healthcare products in the Hong Kong Greater Bay Area through a tech-led ecosystem, enabling clients to unlock the choices that best suit their needs. Please welcome Wing-Fai, the Group CEO of AGBA Group. Nice to see you, Wing.
Thank you. I trust, Anna, you can hear my voice.
Yes, we hear you. We see
All right.
you.
I'm ready to go, madam.
Okay, take it away.
Okay, good morning, everyone. Well, thank you for your time this morning. Okay, and I actually could not summarize what our company does better than what Anna just did. Okay, and so for the next 10, 15 minutes, let me spend about 8 to 10 minutes just going through an overall view of our company, our group, and I will answer whatever questions you have from geopolitical situation that you may read about, hear about, worry about, to how do we make money. All right. So first of all, as Anna's talked about, I trust everyone can read the slides. All right. So just moving forward and backward. This is the first page of our slides. As Anna kindly said, we are by far away the #1 financial supermarket. What do we do is we serve our customer with every single financial product available in the Hong Kong market. We don't manufacture them. We take the product from banks, from insurance company, life insurance company, public casualty insurance company, asset management company, retail brokerage, and we sell it through a multiple channel, including our own largest IRA network in Hong Kong. Okay, as you can see in this page, we have almost 2,000 people in our company. Okay, majority of that are salespeople, are financial advisors. They knock on the door, they go to people, homes, kitchen tables, Starbucks. They give them financial advice for their family, for themselves, for their well-being, financial well-being. So that's one. Second part, we also look after people's physical health well-being because we own the third largest HMO in Hong Kong. We do not take healthcare risk. None of our company have balance sheet risk today. Okay, we are very much a kind customer service platform and company. Okay, we serve everything in between, which is why, for lack of a better word, we explain ourselves as pretty much a pure pay platform company. Okay, next page. We organize ourselves in 4 major businesses, in 4 major verticals, but they interact with each other horizontally. The first one, which is the left-hand side, which is what we call the IRA business in the United States, which we are by far away the largest and the most productive in Hong Kong, as well as southern part of China. Now we fashionably call Greater Bay Area. All right. The #2 vertical is what we call one platform. This is where the magic happens. This is where the intellectual capital, our infrastructure, our tech reside. This is a company, this is an operation that make the sales. Okay, people will do the sales, do the financial advisory, but you still need a very important engine in the middle and the back office, customer service, technology base to close the deal, to finish the transaction, do the settlement, do the aftermarket, after sales services. That is what happening that in the middle, which is the platform business, which we call one platform. We have multiple channels. Our own IRA business is only one of the many channels that we pursue. And the third business we have been in for a while as well is our fintech investment and development business. We have a very good portfolio, very good track record in making our financial investment and strategic investment in fintech companies, especially in United Kingdom and in US. For example, we were one of the very early investors in Oscar Live, based in New York. Okay, and we were the controlling shareholder of a unicorn in UK called Nutmeg, which became a part of JP Morgan now, 100% owned by JP Morgan now. We sold it to them for $1 billion about 4 years ago. Okay, so that is our fintech business doing great. We also develop our own fintech business by learning what we have from a portfolio company overseas. Okay, that's the third business. That's very important. That gives us a lot of critical knowledge. That gives us a lot of understanding what works and what does not work in more advanced market in Europe and in US. And we export that knowledge back into Hong Kong in southern part of China. And the fourth business I touched on earlier on, which is our healthcare business. We start integrating that business. We bought it about a year and a half ago. We start integrating about 12 months ago. We're still very early stage in that. That business is very important for us going forward. We have not squeezed much in as far as synergy is concerned. I will touch on that in later on slides, but it's a very important add-on component for our overall strategy. We serve about 500,000 customers. Well, everyone asks us what is our key investment highlight. Okay, forget about this 5, 6 points. If I can hit on one, which is growth. Okay, we are a highly growth-oriented market. Given where we sit in the value chain of macroeconomics, we are very much at the front of it. Okay, we are what economists usually call, we are the GDP multiplier. When the economy is doing great, we do fantastic. Okay, we do 4 or 5 times the GDP growth. In this year, when the economy is doing really badly in second quarter, especially in third quarter, we did well. Okay, we did slightly better and better than the GDP. Okay, we done very well in Q1 and Q2, but our explosive growth really have to depend on what the macroeconomic will come about, which we can talk about, literally for forever, where China is and is not. Have we lost our glory? This is the end of China growth story. We have a front row seat in that. We very much have a front row seat in that. We knew China economic recovery is in trouble as early as April. Okay, when the market still somewhat indifferent, still very optimistic, in April we began seeing early sign of worry. Okay, so our company is very much a growth-oriented company, and we are very much geared for that. Okay, number 2, we have a lot of unrealized value within our own group. Okay, so even if the economy don't grow, as I touched on earlier on, we have 500,000 customers. There's a lot of cost selling, there's a lot of upselling we can do without expanding market share, without expanding customer from new markets. Okay, number 3 is our core market is huge. The Greater Bay Area, which is the southern part of China, is the 7th largest economy in the world. It's about the same size as where I am, California. Okay, and it's almost 100 million population. It's great. It's within 2 hours distance where we sat in our office in central Hong Kong. And number 4 is our business model. It's very easy to understand. As I mentioned, I can Anna right up front in less than 15 seconds, pretty much lay out our business model. And very importantly is we are supported by a very experienced, a top-notch management team who have decades of experience working in multinational company. Okay, and we have a great shareholder. We belong to one of the largest financial group in Asia, Fubon. Okay, the distribution business we talked about earlier on. Okay, I won't go through these slides, but this is literally just where we are. We are by far away the largest independent broker, independent IRA in this market. And we are especially in asset management business, we by far away offer more product than anyone else. If you can see on the left-hand side, according to Financial Times, we are behind Citi, Morgan Stanley, I think JP Morgan. Okay, so there's no one in the market that can sell asset management product, US stock and bond than we do. We have taken to where we are over a 4.5 year transformations, technology upgrading process. It has cost us about $500 million US. Okay, we are extremely proud of where we are. We are a very powerful company, and we have some of the most compelling technology and infrastructures in the market. With that, we have significant competitive advantage. And our business is, drive revenue from 2 parts. One is platform fee, and 2, are the direct revenue of commissions. Okay, we mentioned earlier on, this is a one-stop platform. This is where we sit. We sit right in the middle. We sit right in the middle. We have the left-hand side, which is the product manufacturer. We have right-hand side, which is a customer. Be it the end retail customers or institutions, we are the one to make the link together. In financial services, the most viable and the most difficult part to build is the distributions. We are a distribution company. We are a platform company, and hence we are a distribution company. More importantly, technology is everywhere in our business. That makes us very sticky to our client. Be it you are a B2C client or be it a B2B client, you depend on our tech. And our leadership all around in our business is very well recognized in the local market. One of the most picky financial institutions in the region, and by far away the most reputable one, is HSBC Group, one of the largest banks in the world. And the life insurance group, HSBC Life, is one of the largest life insurance companies in the world as well. Okay, and we are very honored. We are the only company that is not a family member of HSBC Group that is allowed to sell HSBC life insurance product to retail customers. It is a 2-year due diligence process on us to make sure we're not only good at sales, we're not only good in tech, in closing the deal, we're also very good in KYC and everything, all of the risk management, as well as compliance and regulatory process. So we're very proud of what we can do in the market. And again, as I touched on earlier on, this is a great market. I won't bore you with it. And again, when it comes to macroeconomics and geopolitical situations, I can sit here for an hour and a half, and we still haven't gotten to conclusions where the opportunities will be. But we can talk about Greater Bay Area, as I mentioned earlier on, is a big market. Okay, it's $100 million, 100 million populations market. I won't bore you with it, and I leave the things on the page. Okay, and the West, we touched on earlier on the platform business and our fintech investment, which you can see on our website as well. We are still the second largest shareholder of Tandem Bank, which is a great digital bank in the UK. We are the second largest shareholder behind a Qatar Investment Authority, and is a profitable bank. In healthcare, as I mentioned earlier on, let me spend about a minute on this. We bought this business. We start integrating this business not because we want to get into healthcare business per se, but because in our own business, we have all this wonderful relationship with insurance company. Insurance company depend on us to help them to do risk management. One of the biggest danger for life insurance company or healthcare insurance company around the world is runaway healthcare costs. Because of our existing relationship with insurance company, we help them to become the first layer of defense. Okay, so when a claim comes in, we verify it. Again, we don't take any financial risk. We don't take balance sheet risk. We help them verify to make sure those claims are legitimate. Okay, number one. And number two, we want to make sure all those claims are not overbroad, are not overpriced. That's where we stand. And we help them serve customers. So you may ask, why do we do that? Number one, we obviously take the fee and eat. And number two, even more importantly, allow us to tap into a very large network of customers, doctor, nurse, clinic. This is where we're going to drive revenue from by selling life insurance, financial product into this network. We haven't got much into synergy yet because this is an old-fashioned business. We spent the last year and a half in digitalizing it. Bring it back into year 2023, okay? We just finishing the modernization. We just finishing the digitalizations. We expect starting later this year, we're going to start driving synergy into this business as well as out of this business. And I touched on earlier on, we are just literally first in, and when it comes to our integration with our business, we have a very high hope for it. Again, I won't bore you with detail. this is our financial product, our financial solutions is a result of $500 million of investment. The rest, I leave you guys to read about. And why don't I open the floor for questions, Anna? Hello?
Pardon me. I clicked it, but it didn't work. All right. I wanted to say personally, congratulations on the recent selection in the MSCI Global Microcap Index. Talk a little bit about that. Give us some insight into the potential opportunities in that index.
Well, we are very happy. We are honored to be included. It was somewhat unexpected. And we just work very hard in our business. We work very hard engaging proactively and actively with our investor base. Okay. It gives us a lot of confidence, okay? And growing up is hard. We are very much a new kid in the block as a listed company on NASDAQ, so we are very glad we're included in the index. But this is a first step of many steps ahead of us. And we expect this move will allow us to be included in the watch list of many institutional fund, pension fund, family office, sovereign wealth fund around the world. So we are very happy about the exposure. We are happy about the endorsement.
Wonderful. Well, it also appears that your one platform business is experiencing rapid growth, especially with the HSBC Life Insurance now joining as a partner. So talk a little bit about that partnership and maybe future partnerships and which company might be the next addition.
Yeah, thank you, Hannah. Well, as I mentioned earlier on, we're very proud of that partnership because it's taken us a long time, okay? And HSBC is a very picky partner to work with, and we're just very glad we're the only one who was selected for them to distribute the life insurance product. We're going to do more with them over time, okay? We have given our credibility, given our branding, and we have the right to choose, okay? We earn that. Who we work with and who we don't work with, and while HSBC give us some indications of the endorsement, our very selections endorse life insurance company as well. Okay, so there are many we can do, and the demand for out of Asia into the world market, especially United States, is massive, massive. It's growing by the hour, okay? And I hate to say it, in our business, the more challenges the China economy face, the more inquiry we get. Because the more challenging macroeconomic China face, the more the middle class like to find ways to pack their hard-earned cash and hard-earned saving overseas. That's where we kick in, okay? So we have a long way to go, okay? There are many products we want to partner up with around the world and be able to offer to our existing customer and new customers. So yeah, we are in a long way, but we to go in terms of that partnership development. But this year, we're going to focus on a number of important products, especially when it comes to asset management investment.
We'll talk a little bit about that as well. What would be AGBA's long-term growth strategy? Talk about that plan.
Very simple. It's demand and supply. The demand and supply. Okay? The demand is there. It's massive. Okay? We have been very reluctant to grow our team this year, okay, our capacity. Okay, the bigger the funnel we get, the more revenue we get. And because we weren't very convinced about the economic rebound starting Q2 this year, especially when we enter May, we began to see dark cloud coming our way in China economic recovery. Having gone through about half a year, 7 months of very challenging economic recovery in China, we're beginning to see some, I would say, silver lining, okay, of the recovery. I'm especially encouraged by the interest rate drop last week in deposit in China. We expect more stimulus package, more macroeconomic stimulus coming our way in a few weeks, especially when we enter into October. So you will see us being more aggressive in recruitment in late Q3 and early Q4 going into next year. All right, so that is our demand. Okay, we just build a bigger funnel, we just go grab the demand. Okay, and we need to time that because labor cost is high. Okay, operating cost is high. We're lucky, we have a great team. We dropped our operating costs dramatically in Q2 as soon as we saw the economic recovery were not up to our expectations or market expectations. And so, we have a great team at work there. So demand depends on how aggressive we want to capture the growth. Okay. When it comes to supply, I genuinely believe, as I touched on earlier on, that there's not enough quality product, especially quality investment product for retail investors in the regions. Okay. And you will see about 10, 15 mutual funds, asset management company, take up about 80-85% of all the AUM in the regions. So we have begun to see a lot more middle class are looking for more advantageous return from alternative investment, especially when it comes to private equity. So it's a matter of playing the dynamic between demand and supply. I think very likely this year we're going to grab the opportunity by the horn and be more aggressive in selecting and creating investment opportunity for our customers.
Well, you're talking about growth, so let's talk some numbers. What are the earnings expectations for the remainder of the year?
Well, let's talk about revenue, okay? And having seen what happened, especially in Q2 and Q3, we have been much more conservative in our revenue, okay? And before this year, we had 4 years of hardship in Hong Kong. Year 2019, we have a whole year of social unrest. And then we went into pretty much a total lockdown of COVID for 3 solid years until pretty much March this year. January, February, March this year, we're still very much in lockdown. And despite that, year 2019, 20, 21, 22, we make anywhere between 80 to 90 million revenue per year. We have to expect we're going to make around the same at minimum this year. Okay, and as I said earlier on, the explosive growth that we expect from a very accelerated economic recovery in China did not happen. So we tuned down our expectation, but we still very much believe and confident we're going to deliver about $100 million revenue this year.
Fantastic. You mentioned this, but let's go a little deeper into this. I'm sure some of our audience has this question about what AGBA means by the external factors in the economy of Hong Kong and the greater Bay Area. So how is that impacting the company?
Well, as I mentioned earlier on, we are very much a GDP growth multiplier. Okay, the faster the economy growth, the more explosive our growth is. Okay, when the economy not growing as much, we have to look inward into our own existing customer base, and that's what we're doing. Okay, that's why we still manage to grow organically with our own customer base without tapping into the external factor. Okay, what other external factor we face? I think, to be honest, to be really blunt, this year all business in China and Hong Kong face a lack of confidence from investors. Okay, our stock market, our bond market are sitting at the bottom. We've been bumping around at the bottom since April, May. Okay, some people point out as early as March. Is clearly we are at the bottom. no one has a crystal ball. I certainly don't have a crystal ball when we're going to bump out of it. But one of the biggest questions we got asked is China still investable? Is Hong Kong still investable? Of course, sitting where we sit, we have a positive view about it. But I understand concerns from investors around the world. And a lot of people are still taking the wait and see attitude at this moment when it comes to investment in Hong Kong and in mainland China.
I'm going to try to combine a few questions here. Nam Junghuan asks, what's your opinion on the stock price? And what's a milestone that could turn it around?
Well, I think our share price, as I said to my staff, my people, we own a lot of share ourselves. We hate our share price where we are, okay? And we don't know what happened. We certainly see a lot of short positions, okay, over time. And we have engaged investment banks. We actually engaged 3 of them to dive deep into it and see what actually happened. As management, we can only do a few things. Number 1, continue to run our business aggressively, okay, which is what we do, where we do every day. And number 2, being very proactive and engaging the investor community, which is exactly what we do. I spend pretty much we'll spend an entire month in September together with my team on the road seeing investors, okay, and make sure the story is understood, okay. And 3, again, the external factor is real. People are worried about China, people are worried about Hong Kong. I get that, okay. And if I read I read 3 newspapers, U.S. newspaper, and the Financial Times. I read Wall Street Journal. I still like the hard copy. I read New York Times. If I only read those 3 newspapers, I will be in depressions. I will definitely pull equity dollars out of Hong Kong and China. In fact, I will short Hong Kong and short China as well, just reading those newspapers. And I understand the concern, okay? I think at least 50% of the factor of our share price is driven by that, okay? And we're going to work very hard to get ourselves out of this low point, okay? And again, the number 4 point is credibility, okay? And being a small company, people are worried about, are we for real, okay? We had one of our investment bank, which we is on a retainer. They sent one of the most senior guys just to show up in Hong Kong to hang around with us to make sure we're real, okay? Once they saw we have a whole building, we have 3,000 people, we have a couple of thousand people in sales, he get it. He went back and said, this is a great company. So I understand there's a trust factor as well. Hopefully now we have 2 quarters as a listed company. We have begun to build up that trust factor among the investment community, okay? And we're going to continue to build on that. We're going to continue to leverage on that. Again, trust takes time to build, and we're going to invest a lot of time, a lot of effort in building that, Anna.
Well, a follow-up question from Nam. Nam says he thinks your company should advertise itself in the world market. So are you devising a way to spread the company's presence to people? Yeah,
thank you very much for these questions. Number 1, we can't do everything at the same time. We're going to be selective. We bought a company in Singapore. We're going to be in Singapore by the end of this year. We're going to be rather more aggressive. Thank you for that questions. And we're going to be rather more aggressive in the United States.
And Eric wants you to talk about your staff. You have 4 models. How many employees do you have? Talk about your team's experience and expertise.
Thank you. My management team is fantastic. Okay, I owe my life to them. Okay, I really do. I say that with great passions. They don't need to work with us. They can work in HSBC, Prudential, AIA, and any great company around the world. Okay, they came to us because they see our vision, they see our growth, they see we provide a alternative path forward of growth. Okay, and in one of our slides in our presentation post on our website, we list out the very impressive credential of our entire top management team. Okay, and in terms of number, we are about over 2,000 people. Okay, about 1,500 of those are salespeople. A financial advisor. In U.S. definition, they are the IRA. They're the licensed our register. So they are our engine. Okay.
Perfect. Well, we are out of time. Do you have a quick closing remark for our viewers?
Well, we work hard. We work hard. We work hard to deliver results. We're going to continue to do that, and we're not going to stop. And we work this tirelessly. Thank you.
Great job. Thank you so much for this wonderful presentation, and we look forward to having you back in the future.
Great. Thank you, Anna. Thank you for your time. Thank you, everyone.
All right. Stay with us, everyone. We'll be right back with our next presenter.